Well, hello, fellow traders and investors. I'm L.A. Little, and this is your daily NeoTA wrap, where we take a look at these markets and we do it from a neoclassical perspective, each time asking ourselves what happened today and what might it tell us about the coming ones. I do this show 4 times a week, Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. It's under the channel L.A. Little. If you haven't subscribed, you can easily do so. Just reach up in the right-hand corner and hit the subscribe button. Anytime content is pushed, you'll get notification of that. Now, last night we were thinking we could get a push back to the upside, some sort of a bounce. Boy, they tried in Europe. I was keying off of Europe. They tried in Europe all day long, and they just gave it up at the end of the day. They close down, they break the B point of an ABCD structure of a downside. That also led to more pressure here in the U.S. markets. In particular, the big cap technology stocks were taking it on the head, and we had the Russell down just below those. S&P, Dow, not as much. We had a merger news out of DuPont and Dow Chemical. That gave basic materials a big spike, kept the Dow up. As a result of one of the weightings inside of it. But for the most part, it was down and furious, and it was down across the board. If you're looking at silver, if you're looking at gold, if you're looking at the dollar, the moves today don't make any sense unless you're viewing those moves only in the context of the actual move in the currencies. And if we look at the currencies themselves, start there. That really is the focus here in today's market, because the dollar going down, you should have seen some commodity movement to the upside, but you didn't. Big move down, gap up in the euro, gap up in the yen. They kept moving all day long. Dollar kept moving all day long the opposite way. You've got ABCD structures to the downside now, and I suspect this will add some buying power to the various commodities. But today it was just the fact that we had disruption in the currency, in the Forex, that everything got hit as a result of it. Currencies, when they move fast and they move directionally, and this was a continuation move as you break under a B point here, and as you broke over a B point on the euro and on the yen, that continuation move projects that this is going to move farther, and the fact that it's going to move farther, of course, is a fast move in a market that dwarfs, the equity markets. And so the moves here tend to exaggerate what you see in equities, and we did see that exaggeration today, because the moves that we saw, right, when you go down across the board like this, they don't make sense with respect to what we should have seen. If we look over in the bond market, we continue to get pressure in the bond market early. It flipped around late as the stock market continued to take hits. As I was saying, in gold, you didn't get any kind of relief. If you look at the emerging markets, no relief there either. And in the high yield markets, you got a standstill finally after a break of a swing point low. And let's see what the high-quality corp bonds look like. What did they do? They actually held up pretty well, too. So, dollar moving things. Let's go look at the indexes and see what they tell us. And I'm going to start with the overseas market and the DAX. So we got, the key this morning coming in was, what was the German market going to do? Was it going to hold, or was it going to break? And right up until the end of the day, it looked like it was going to hold. Matter of fact, we were talking about it in the trading room today, that it looked like it was going to hold. But by the end of the day, it did not hold. You broke the B point of an ABCD structure to the downside. That opens up the possibility of this extension to come down into this swing point high, into the bottom of this bar, and do a bearish move to the downside. Now, do note 2 things of importance here in the German market, and I think it's the most important of the markets there. One is you tested this little gap area, and the test on that gap area, is 10,586. You got into it, you closed over it. So you test into it, you test it with less volume, and you hold. So that, again, even though we got the break, this thing could bounce off of this test hold, if you will, off that gap area. The second thing is that if you look at the CACs, and let me pull it up, there you don't have the benefit of that, and there you actually have volume expanding as it comes underneath this low. 1.5 there, you do 1.7, so you're coming into the swing point high, you got more volume. The CACs is saying, hey, I can go lower. So what do you have? You have divergent signals. You have one saying I could get a bounce, one saying I'm just going to go lower. If we go to the U.S. markets, we have the same divergence, although it's a little bit different. The divergence here is the low from December 3rd. You're doing about 43, and you come into it with almost 44. So you get under it, you have a little bit more volume. That says you can come back in there and test it again tomorrow. If we look at the Russell also says I can go lower, and it's coming into 3 swing point lows on the daily time frame. Doesn't have it on the weekly, has it on the daily, coming into them, and volumes expanding. Those two indexes both say I can go lower. If I go over to actually what was weakest today, it was the NASDAQ and the NDX. Volumes here lighter as they came into that December 3rd number. They go under it, they go back over it, and they hold. And if you look at the NDX, they didn't even get under it. They're pushing into it. They push into the December 4th number, and they can't stay under it either. So indexes, divergent picture, which one's right? You don't know. Overseas markets, CACs, DAX, same thing. Divergent picture. Which one's right? Again, you don't know. When you don't know, you just have to, either stay with the general trend, which is what I tend to try to do myself, and that is that we have a trend that's been up. Yeah, it's been stagnated and going sideways, but the overall trend is up, and you have to continue with that trend on the expectation that eventually it's going to right itself and make its move on an overall basis. On a short-term basis, if you're trading this, you probably stand aside and you see what it's going to do next. Let it decide, let it give you a better setup than what it's giving you now, because right now it's just not giving you what you want to see. And then to add to that, last night looked like it should bounce. Nothing big, but it looked like it should bounce. Didn't get the bounce, or actually tried but couldn't get the bounce in the DAX. Ended up losing it here as well. That's another bad sign short term, saying what should have happened didn't happen. And anytime that's the case, you got to raise your antenna and say, okay, that's the way it is. I have to take and respect that and be a little bit more careful until this market rights itself and does what it should be doing in terms of the reads that are out there. Tonight's reads, mixed. That says it could do either one tomorrow. That says we don't have a good read. We'll see what tomorrow brings. As of tonight, it's ambivalent. It's not certain. I will leave it at that. There's not much more to talk about. It's really about the currencies now, and the currencies are moving everything else. And as you saw today, as they move things, they don't even make sense themselves. Things that should bounce today didn't bounce today. Everything went down. That's it for tonight. Have yourself a great one. Take care, and I'll see you next time. Good night.